Palantir now on their fourth quarter or the fourth consecutive earnings report just showed a profit. That means they will now enter the S&P 500, and that also means we have 1 full year fiscal of EPS, which we can now evaluate Palantir correctly. But the question is it cheap? Should we buy now? Should we wait for a pullback? Because that Palantir stock has done a good rally recently. So here's the Palantir stock price prediction chart all the way to 2030. If you guys have been following for some time, I do this for Tesla. But it's a very simple, straight to the point, very easy, and a formula. I'll probably make this available on Patreon so you guys can play around with it as well. But we made 3 different charts, 20%, 25%, and 30% growth year over year in terms of revenue. So we're going to see what the stock price would be every single year up until 2030 with the amount of revenue, profits, and all that good stuff. So in 2023, even though we haven't finished the year yet, and I got all these numbers from Simply Wall Street. If you guys scroll down to the future growth on Simply Wall Street for Palantir, it gives you 2023, 2024, and 2025. And I took those exact numbers and I tried to break it down here in 2023, 2024, and 2025. But let's talk about 2023 right now and let's see what will happen. Right now, we are forecasting to have a 4.2% operating margin in 2023, which is absolutely a sheesh moment. But this is on the average. Remember, the first quarter and the second quarter of Palantir, it was around 2%, 3%, as low as 1.8%. As Q3 recently was like 7.7%, which was ridiculously high. So we may end up on the average for 2023 at 4.2%. That's what Simply Wall Street is thinking as well. They're thinking over 2.2 billion in revenue and net income gap of almost 200 million, which would give it a non-gap of almost $500 million, which is absolutely a sheesh moment. But that would give us a fiscal EPS gap of just 9 cents, something that we can now play with to see what the stock price will be. But let's do that at the end. Let's figure out what the revenue and profits would be from now to 2025 because we do have those numbers. Let's plug it in from the Simply Wall Street. Bam. We're looking for an operating margin of 7.2% in 2024 and 11% in 2025, which is a triple. Sheesh, that's crazy. That's insane. So we have net income here, gap of 273 million, not billion yet, and 438 million in 2025. Revenue goes from 2.2 billion from 2023 all the way to over 3 billion in 2025, according to Simply Wall Street. So that's absolutely insane. We see the EPS and non-gap on a fiscal year going from 9 cents to 13 cents to 21 cents. So we are going very exponentially here, which is insane, which is really good. Let's figure out 2026 to 2030. As I mentioned, guys, this is the 20% one. 20% growth year over year in terms of revenue. And so if we do that, obviously this is a linear. A company like Palantir is more like a exponential growth, but I don't understand it as much as you guys do. I do own a little bit of Palantir, not as much, but this is more of a exponential growth. We can see that with the revenues, with the profits. We can see that with companies and countries getting more involved with Palantir. So 20% here, and I know if we look at Simply Wall Street, they are saying 34%, 35% earnings growth rate and a 34%. So really, even my bull case, which is 30%, is not even, matching these estimates here. So again, I'm keeping things very conservative. So if we do 20% here year over year from 2026 to 2030, we get almost 8 billion in revenue, which is, a 4x almost 4x on a 20% growth rate from now, 2023 to 2030. For cost of revenue, I increased it 25% year over year. It could be as high as 30 or 35, but I still don't understand how they do the cost of revenue here, but nonetheless, this is what we get from 430 million to over almost 1.6 billion in cost of revenue. Over that, I'm just going to go ahead and just enter all the numbers here. Bam, as you guys see here, we have gross profits growing very exponentially. Like every single year, it's growing by $1 billion, which is absolutely a sheesh moment on a 20% growth rate. So that's crazy. Operating costs here is growing at 10% year over year. Now, I do think operating costs, this is not like Tesla where they benefit from economy of scale, or maybe they do, I'm not too sure. But I do think the more deals they make, the more efficient they're going to get with their personnels and their expenses and their costs and all that kind of stuff. So that's why I give it a 10% year over year. Comment down below. Let me know what you guys think about the operating costs, because this, I don't understand Palantir like most of you guys do. Nonetheless, we get an income operations right here all the way to 2030, it's almost at 4 billion, operating margin of almost 50%. We're talking about Microsoft level operating margin. It's absolutely insane. Absolutely insane. We have interest income reducing year over year because right now Palantir has a lot of their cash in bonds and high interest savings accounts, or high interest returns. Obviously, that's not going to stay forever. I do expect sometime in 2025, actually 2024, but in 2026 and onwards to be low as 2%, 3%, probably even going lower and lower, even up until 2030, only making 30 billion, as most of their money will be reinvested back to the company or doing more buybacks, which we'll talk about in a second. Other income, I left it at like 1 billion from 2028 and onwards because I really don't know what the other income could be. Again, if you guys don't, please comment down below. Taxes will increase year over year because they're making money, but Palantir is smart. They know how to avert it. They know how to move around it. But nonetheless, year over year, they're gonna have to pay more. Simple as that. Net income gap of 3.6 billion. Stock-based compensation gets increased every single year, about 50 to 25 million dollars. You got the payroll here as well. This is exactly as a statement of operations. That's how I got all these numbers from and the structure. So I didn't make all this myself. Then we got the income tax and adjustments. Then we got net income non-GAAP. Then we got shares outstanding diluted, which, by the way, this year in 2023, I didn't add it in this year, but for next year, they're doing $1 billion in buyback. Now, if they continue to make a lot of money, and they're doing $1 billion now, and they're doing an operating margin of 7.2% and a net income of like $273 million and doing $1 billion now, what's going to happen later on when they're actually making billions of dollars, right? So for the shares outstanding, every single year, I assume they're going to buy back 2% of it. So that's why we can see the share outstanding going lower. And you guys can see here the EPS fiscal year on the annual basis is going higher and higher and higher and higher and higher and higher, which is a sheesh moment. So let's recap here. By 2030, we get $8 billion in revenue, 47% in operating margin. Again, this is a 20% growth year over year. I just have to keep saying that, which is absolutely insane. Net income gap, 3.6 billion, and non-GAAP over 4 billion. That is a 15x from now till then in terms of net income. Gap, not non-GAAP, but gap. I mean, that's just absolutely insane. With the EPS, you guys can see from 9 cents to almost $2. That's almost a 20x. So you can imagine what the stock price would be. And if you guys are ready what the stock price would be, man, then smash that like button. Why isn't the like button smashed? Come on, man. Let's go. So 2023. Right now, the PE is around 290, which is just insane. But it's justifiable because they're just now showing a profit and we have a full fiscal year of EPS. But we're talking about the end of the year. So when quarter 4 comes out, I'm thinking a PE of 250 would make sense, which would give it a stock price of around $22 per share and a market cap of $70 billion. Sounds reasonable to me by Q4. It may not happen. Again, this is all a prediction alone. Don't take all this as facts. Take it with a grain of salt and do your DD, obviously. But that's 2023. In 2024, I think the PE will come down to 200, which will give it a stock price of $25 per share, which would be $80 billion, $81 billion in terms of market cap. Sheesh. And that's why I say if Palantir goes to $25 per share, I am going to sell and buy more Tesla. I never bought Tesla for the long term. I just bought it to make a quick buck. So if it goes to $25, I'm definitely going to sell it if it goes next month or so. Because we're paying for 2024, really, if that's the case. In 2025, I gave it a PE of 150. There's a $31 per share and a market cap reaching $100 billion. So that's actually not bad. In 2026, PE of 100, $40 per share and a market cap over 130 billion. 2027, PE of 75. That would give us a stock price of $48 per share and a market cap of almost $160 billion. 2028, 70 PE, we get $67 per share, market cap over $200 billion. 2029, 65 PE, and this is going to continue going down to $89 per share and a market cap almost reaching $300 billion. And by 2030, 60 PE, I think does make sense by 2030 if they have a 46% margin and they're still growing, crazy. Microsoft right now is 35 PE and they're valued almost 3 trillion in market cap. These guys are not even, they're not even 400 billion yet. So at 60 PE, $113 per share and a market cap of almost $400 billion. That is a crazy return. That's a 5x return if you're holding long till 2030. That's insane. Now, most of you guys will go like, oh, Pejjy, man, it's going to go to 2030. It's going to be $500 per share. I mean, let's see what 25% year-over-year growth is going to be. Bam, 25%, 60 PE, $130 per share, and a market cap $500 billion. So that is 25% growth year over year, and that's a revenue reaching almost 10 billion and a net income gap of 4.5 billion and non-gap of 5 billion. So 60 PE of 140, $500 billion. That kind of makes sense. I don't know about $500 per share, but let's check 30% year over year. That's $165 per share, 60 PE, over $500 billion in terms of market cap. So I don't see, unless there's some crazy new revenue stream or a crazy new income stream or sales or new product from Palantir, or something bad happens in the world, like let's hope it's not World War III, knock on wood. But if that happens, we can see the PE go as high as, if you want the $500 per share, that's a PE of almost 200. Can be a bit less, 190, 185, 180. Yeah, around there. $500 per share of almost $1.7 trillion. That does not make any sense to me by 2030. It's just ridiculous. 60 PE. I mean, if you want to go to a trillion, that's 100 PE or 120 PE. Yeah, 110 PE. That's still high, but if something bad happens to the world and Palantir is needed, I think that's the case. But I don't see that. I mean, unless something bad happens, I don't see that. 60 PE, and that's a 30% growth year over year. And that's with a revenue of almost $12 billion, net income of over $5 billion, operating margin of 45%, and net income non-GAAP of $6 billion. So that's all I gotta say. That's my opinion, and based on that, most of you guys were saying $200 to $300 per share. I mean, we are kind of getting that with 30% year over year. Simply Wall Street, they're saying 35%, but okay, if you want to put 35%, we can put a PE of 70. Maybe we can reach 200 by that. So that's my breakdown of Palantir stock, and I do think it's solid. I do think we are going the right direction with Palantir. Worst comes to worst, a 5x return by 2030. The best case here, maybe 8 to 9x, based on the numbers that I have here. But again, I don't know Palantir, and if you're a Palantir investor, you know more than I do. I'm more of a Tesla investor. I'm all into Tesla stock. And if you guys want to know what Tesla stock 2030 is going to be, check here, because I know exactly how to evaluate Tesla, because the breakdown is much easier for me and I understand the company, unlike Palantir. So check it out. You won't be disappointed. Guys, get your I Bought the Dip t-shirt. Whether if you're, well, this is more towards Tesla, but yeah, man, get it, support me, subscribe, and I shall see you guys in the next video. See ya.